Josh has another move to document. You sold eBay. Tell us why.
Earnings were weak. The stock is basically sitting on support and really fell out of some of the metrics that we look at when we're looking for the strongest stocks in the market. So it's basically flat with where I got into it. But this stock had been in an uptrend. It had an RSI approaching 70, which is a momentum name. And now that RSI is mid-50s. So it's just out of consideration. And not everything you put on works out. So I think it's just making sure that you are maintaining a portfolio that's in accordance with what you're actually trying to accomplish.
Okay, down about 3%. Keep our eye there. We do have other stocks on the move that the committee owns, including Qualcomm, leading the NASDAQ 100 today, and that is after an earnings beat. It's a 52-week high. Price target gets bumped at JPM and Morgan Stanley. Brian Belsky, you own the stock.
Scott Wapner, yeah, we've used it as a barbell with NVIDIA all year long. And we think as the year progresses, and especially after May 22nd, when NVIDIA reports earnings, I think we're going to start to see in the second half of the year even more emphasis on the other tech stocks. This is still an amazing large company, but I think you're going to have and see much more fundamental performance and strength from a technical perspective of the other tech leaders as well, not just the Mag 7.
Okay, let's take a look at Regeneron, Brian, because they had an earnings miss. So stock is still up near 4%. EPS missed top and the bottom.
Yeah.
Guidance, though, is that why the stock's up? Because the guidance was good.
You know what's really interesting? Liz touched on it earlier about the whole companies are coming out with great earnings and then they're being penalized. Companies are coming out with meh earnings and they talk about guidance and it's green light, go. And I think Regeneron's in that. We love the pipeline. We love the growth prospects of this company. Obviously, it's not one of those steady eddies in healthcare, but we like it for the beta that it adds to the portfolio. Okay. Take a look at Shack. They had earnings as well. The EPS beat, Rev missed. They raised their full-year outlook, and the stock is up 2.33%. Mr. Josh Brown, comps up 1.6%.
So this has now turned into one of my biggest winners ever personally. Stock is up 93% in the past year. It's up 42% year to date. It's frankly, blowing the doors off most companies in the space. And the reason why is clear. They spent the entirety of the post-pandemic period tooling up for just becoming faster, more efficient, having the app be more useful for their heavier users, no pun intended. And more important than any of that is getting into the right locations and broadening out that geographic footprint. They've done all those things successfully. And if you look at the numbers, revenue was $290 million. That's up from $253 million the year prior. This is now a $1.2 billion annual revenue run rate and climbing. But more important than any of those things, Randy Garutti, who had done an amazing job since the beginning, since this was a hot dog stand in the park, has stepped away. New CEO has been announced. The gentleman is named Rob Lynch. This news hit during the course of the quarter, so we really haven't had a lot of time with him there. But this is the man who ran Papa John's from the comeback starting in 2019 through now. Prior to that had been at Arby's, huge successful advertising campaign there. Rob Lynch has experience running thousands of units. That is where Shake Shack is going. They have the right leadership in place, and I think as a long-term shareholder, that supersedes anything that took place over the last quarter.
All right.